Welcome back to the Daily Crypto Roundup, the show that brings you the biggest, sharpest, and most important stories from across the crypto world every single day. And today, we've got a genuinely packed lineup. From a major UK fraud investigation pulling NFTs and crypto schemes back into the spotlight, to the Financial Stability Board firing off a clear warning that global regulation is nowhere near aligned, to the entire crypto market wiping more than $1 trillion in value over the last 6 weeks, to Tether making a strategic move in Latin America, and finally, XRP taking a massive step forward with the launch of its own ETF. There is a lot going on, and we're going to break it all down in a clean, detailed, and level-headed way. But first, before we get into the markets, I want to talk directly to you, the listeners, because what I'm about to say genuinely matters for the future of this show. As you know, we recently switched podcast providers behind the scenes. All the content's the same, the quality is the same, the schedule's the same, but this technical switch has unfortunately caused Spotify to throttle our algorithm. Not because fewer people are listening, far from it, but because when you move a podcast feed, Spotify treats it like a new show for a while. It slows down discoverability, slows down recommendations, and pushes the show much less aggressively. And one thing we will never do is start putting episodes behind paywalls, or ask people to subscribe to premium tiers. That's not the kind of community we're building here. Everyone gets the same show completely free. The same news, the same breakdowns, and the same honest commentary. But to get the algorithm pushing the show properly again, we genuinely need help from the community in one very simple way. Pressing the 5-star rating button. That's it. It takes 2 seconds, and the impact is enormous. And to give you some perspective on how powerful it is, if every follower we currently have pressed that 5-star button today, we would be top 10 in the technology charts tonight. Not maybe, not possibly, not if everything lines up perfectly. We would be there. It's that strong. So, as a way of giving something back to the people who support this show, and because it's Christmas, we're running a small, fun community giveaway. If we hit 200 5-star ratings before Christmas, we're giving away 50 XRP each to 2 listeners. Nothing crazy, nothing gimmicky. Just a small thank you to the people who help push this show through the algorithm and keep it growing. And importantly, if you've already rated the show in the past, you are fully included. All you need to do is comment "done" in the comment section below the episode so we can manually add you to the list. If you're rating for the first time, same process. Hit the stars, comment "done," and you're in. It helps massively. It keeps the show alive during this algorithm slowdown, and it keeps this community moving forward. Right, let's get into the market. Bitcoin is currently sitting around $86,700, and today has been one of those strangely quiet but nervous sessions. Not much movement up, not much movement down, but a definite feeling that traders are waiting for something. Some macro signal, some ETF flow shift, some regulatory headline to give the market direction. Ethereum is holding just above $2,800, and that's been the story for a few days now. Hesitation. Traders don't want to push it down, but they're not confident enough to push it higher either. XRP is hovering around $1.99, with surprisingly sturdy price action considering everything else happening in the market. BNB is sitting comfortably around $874, barely moving, but that's classic BNB. Solana is trading around $132, with a small pullback that looks more like consolidation than anything bearish. Cardano's drifting around 43 cents. Dogecoin's sitting roughly at 15 cents. Tron seems glued to the 28-cent zone the way it always does. Litecoin is hovering just under $87, and Bitcoin Cash is around 477. In short, the market is outwardly calm but internally tense, and that usually means something's brewing behind the scenes. Let's move into the first big story of the day. And this one comes out of the UK. The Serious Fraud Office has officially launched a major investigation into a collapsed crypto scheme worth around $28 million. This investigation isn't just about the money. It involves NFT sales, suspicious fundraising, and a network of digital asset promoters who allegedly extracted funds from retail investors with promises of extraordinary returns. What makes this story important is not simply that it happened. Crypto scams happen every month. but that the SFO has decided to step into the ring again. For more than a year, they've been criticized heavily for being slow, reactive, and far behind the curve when it comes to digital assets. But this investigation signals a shift, a message that the UK wants to clean up the space, protect retail participants, and position itself as a more serious regulatory environment. One analyst in London put it bluntly: the SFO stepping in means crypto is back on the UK's enforcement radar. And that's exactly what this feels like. A reset. Now we move to something far broader, and arguably more important. The Financial Stability Board has released a thematic review warning that global crypto regulation is still highly fragmented. And this isn't just a boring bureaucratic report. The FSB is the organization that governments and central banks actually listen to. They're the ones who shape high-level regulatory frameworks and cross-border requirements. In their newest review, they essentially say, crypto has matured, but regulation hasn't. Each region has its own rules, its own loopholes, its own blind spots, and in some cases, its own misunderstandings. They warn that as crypto markets continue to scale globally, these mismatched frameworks create risk, not just for investors, but for financial stability. One researcher involved in the report said, crypto is now global, but its rules still behave like it's local. And they're right. The industry has outrun the regulators. Some countries are over-regulating, some are under-regulating, and some are regulating things that don't even exist anymore. What's interesting is that the FSB isn't calling for crypto to be shut down or restricted. They're calling for consistency, coordination, and shared standards. And speaking of consistency, the next story highlights exactly why this matters. The global crypto market has shed over $1 trillion in value over the last 6 weeks. The Guardian reported this yesterday, noting that the wipeout was driven by tech bubble fears, fading optimism around rate cuts, and a broader risk-off mood across financial markets. Bitcoin, Ethereum, and nearly every major altcoin have struggled to hold their ground. Retail participation has cooled. Institutions have pulled back slightly, and the overall sentiment feels like the market has hit a psychological wall. An analyst quoted in the report said, "Crypto isn't collapsing, it's exhaling." And that's a pretty fair description. This doesn't feel like a crash. It feels like the end of a speculative wave that needed to unwind. And whether the next wave higher is coming soon, or takes another few months, depends heavily on macro conditions, inflation prints, interest rate expectations, liquidity injections, and ETF flows. Which brings us neatly into the fourth story. And this one is particularly interesting. Tether has invested in Parfin, a major Latin American crypto infrastructure company. On the surface, this looks like a normal business deal, but it's actually part of a much bigger picture. Tether dominates the stablecoin market, billions of dollars in daily settlement, but much of that dominance comes from emerging markets, especially in Latin America. USDT is used heavily for remittances, trading, savings, and bypassing local currency volatility. So Tether buying its way deeper into Latin American financial infrastructure is a strategic move. It strengthens its position not just as a stablecoin provider, but as a financial network. The fact they're focusing on institutional settlement tells you where they're aiming next. Large-scale payments, merchant rails, and cross-border flows. A regional analyst said earlier today, Tether doesn't want to be a crypto company. It wants to be a parallel financial system. And honestly, that's exactly how they're behaving. And finally, the biggest story for XRP holders in years, the launch of the brand new XRP ETF in the United States. The ETF is already live, trading under the ticker XRP, and the management fee has been temporarily waived, a surefire tactic to get institutions testing the waters early. This is a landmark moment for XRP, especially after everything it's been through with the SEC. For years, it sat in that strange limbo, incredibly popular globally, but with unclear legal standing in the US. And now, quietly, without the chaos and drama we usually see with Bitcoin or Ethereum ETFs, XRP finally has a regulated investment product of its own. One analyst at Galaxy Digital put it perfectly. If XRP gets even a fraction of Bitcoin's day one ETF inflows, This becomes the biggest structural shift in its market since 2018. And he's right. This changes liquidity dynamics, institutional access, and overall credibility in a way that was unthinkable just 2 years ago. And that's everything for today's Daily Crypto Roundup. Make sure you follow the show, comment "done" if you've rated it already, take part in the Christmas giveaway, and we'll see you at the top.